Alright, just take note that this presentation is purely for education purpose. Information in this presentation is intended for general circulation. Does not take into account specific investment objectives, financial situation, or particular needs of any particular person. Okay, let's carry on right now. So for those who are new to the webinar, I repeat this before I start just to make sure that you are in tune with what I'm talking about. I use a lot of price action to analyze the markets. Basically what I'm trying to do is to understand what the market is trying to do in terms of these three phases, okay, which is uptrend, downtrend, or consolidation. This is a very, very fundamental analysis of this is a very basic form analysis, but it gives you a bit of understanding on what the market participants is trying to do so that you can position yourself correctly as a retail trader and simply going in the flow. Okay, I'm predominantly a trend trader, intraday to swing, so I always look at the daily and weekly charts as my reference point. Okay, I can't cover, I don't have enough time to cover price action theory, but there's a lot of material online. I do a bit of seminars in the office as well, so come by if you have time. But to me, price action is very important. Okay, price action gives you understanding of where the buyers and sellers are, what the market is trying to do. Because a lot of indicators out there, like your MACDs, your oscillators, a lot of them are lagging indicators, but price action is somewhat a leading indicator. So I combine price action with multiple time frames, with support and resistance, and you can really plan really good, solid, high probability trade plans just using those few tools. Okay, is there a class of price action at IG? We partner with a few educators. Okay, since you asked the question, John, let me just go to our website for a bit. Okay, never mind. We partner with a few educators to conduct seminars. You can go to our seminar page at ig.com.sg, and from there you can see which topic interests you. I do a weekly lunch talk every first or second week of the month. Okay, I did it this week. I did last week, sorry, on a Wednesday, if not wrong, at 12:30 p.m. It's a lunchtime talk. Basically, I cover market scans and give you my outlook for the next week or so. Okay, but if you can't, there's always a webinar, so that's why feel free to shoot any questions. Okay, especially if you have difficulty trading or you have any problems, psychology, or no, I'm not saying your psychology problems, but trading psychology problems, strategy that you want to discuss, feel free to bring on the webinar so everybody can benefit. Okay, so let's move on. So let's start with the indices first. Okay, now a lot of the indices for this week, we all know that it's rallied quite a bit for the past 2 weeks. In fact, the rally caught me by surprise. But this is the point whereby we can really see who's the winner. Will it be the bulls or the bears? Let me show you why. Okay, so if you look at the Dow Jones, right, this is a weekly chart. Now I drew this little wedge consolidation. So if you use the price action theory, which I mentioned just now, right, this is purely a consolidation mode on a weekly chart. Okay, it's a wedge consolidation pattern. You can actually draw, let me adjust this a bit. Okay, I use chart patterns as a gauge. Okay, I don't trade off the trend line levels, but I use it as a gauge. So you can clearly see that this is forming into some form of a wedge. But right now, the price where it is close to 17,000, which is also this level of resistance here. Okay, it's very, very obvious, this resistance. You can see the different touches here: resistance, resistance, support, support, and resistance here. Okay, so they're it's very obvious resistance level. I think last week I pointed out a bullish divergence, and so not that surprising that it went up. But right now, it's a key level whereby we'll see how sustainable this rally is for the past 3 weeks, whether we might drop down back to the support of the wedge, or we might break this 17,000 level and go up to this trendline resistance level about 17,005. Okay, this is a key level right now, so pay very close attention to it. The thing that if you're a swing trader like me, it's quite hard to trade such patterns because, okay, for me it's in the middle of nowhere. Yes, it is resistance, but ideally I prefer to trade at the extreme levels rather than the middle, even though this is a key resistance level. So key thing to watch, if you go to the daily chart, you can see that there's a bit of the daily chart, the 17,000 level is here. Okay, here. So we are at that level right now. Okay, you can see the number of touches here. Very, very key level. So take a look at a few days and see how the candles form. Look whether we are able to break past this 17,000 level, because if we are not, I'm more inclined to think that we might come down to this support level somewhere here. Okay, around the 16,005, 16,008 area. Yeah, I'm not a big fan of the trends on the higher term time frame because it's consolidation, but the daily looks quite bullish. However, we are at key resistance level, and I'm not surprised if we are unable to break the 17,000 level next few days. We might come down to test the previous support about 16,006, 16,007. Okay, so that's the trade plan for the Wall Street Cash or the Dow Jones. Quite similar to the S&P 500 as well. You can see that it's consolidating. Okay, you can draw a line across here. You can draw a line across here as well. Okay, but it's not surprising. Let me delete some of the lines to make it less confusing. Okay, but it's not surprising that we are consolidating at this level. So the key level for the, oh sorry, this is NASDAQ, sorry, doesn't matter, same thing. So this is NASDAQ, I'm sorry, this is not S&P 5, this is NASDAQ. But the key level to watch out for is this, for the NASDAQ, is the 4350 area. So same kind of thing with most of the US indices. Is in consolidation mode in the higher time frame. Lower term time frame is bullish. However, we are at a key resistance level, and I would say this week we can see whether the rally really have legs, or will we come back down to the support levels which were tested in the late January, early Feb period. Okay, very similar analysis for most of the US indices. Okay, moving on to Europe, let's look at the DAX. Again, you have any questions, please shout out, yeah? Okay, look at the DAX, so look at the weekly chart. Okay, now the DAX look a bit more bearish than the the Dow Jones or NASDAQ or S&P, okay? Let me just draw another line here. Okay, again, when I draw chart patterns, the trend lines, I use it as a guide, okay? Because trend lines can be subjective, so I always confirm it with horizontal levels for support and resistance. That's very, very important. Some people treat trend lines like a really hard and fast level. It's quite dangerous to do that, because sometimes it can be discretionary. For example, this is a weekly chart, right? How I draw a trend line on a weekly chart, some people draw it like that, some people draw it like that. It's still a trend line, isn't it? But the number of pips pips distance by just moving the trend line by a little bit can be a lot on a weekly chart. So you understand what I mean? So chart patterns are some form of guide, okay, some kind of overview to see where's the support and resistance. But if you want to trade off the levels, I think the horizontal support and resistance are better. Okay, so the DAX right now, key level, let me draw the line for you. Here, okay, we're somewhere there, around the 9,008, I would say. So let me just zoom in a bit. This is a weekly chart now. So, but the difference between the DAX and the the US indices is that we are some form of in a downtrend. Okay, if you can see, the price action is lower low, lower high, another lower low. So this level is important to me, the 9,008, because if 9,008 is broken, right, it means the downtrend is invalid. Okay, but right now it's still in a downtrend. Yes, we are consolidating in this little channel here. So if it breaks above 9,008, I'm not surprised if we go back up to the top of the channel around 10,005. If not, we might come back down to 9,000 or so. All right, so we are at very key levels of most of the indices, and this week, I would say it will show itself. And don't forget, this 9,008 level is also this trend line support turn resistance. So if you look at this trend line here, it was support, 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 and right now it's becoming resistance. So key levels. Okay, if you don't know what the market is trying to do, no one will shoot you. No one will force you to trade. It's good to take a step back. Okay, wait for the market to break out or form a nice direction, nice trend, and then you just go with the flow. All right, so a lot of the indices, I would say, just be a bit patient for these few days. Let's see what happens, and then we can take action once there's a clearer picture. Again, trading is a game of probabilities. All right, nobody's putting a gun to your head to get you to pull the trigger if you have no idea what the market is doing. Okay, it's all about probability. So if your probability is not for you, if you think the trade is not high probability, don't take the trade. Easy as that. Okay, so this is DAX for you. Let's go on to our Asia indices, the Nikkei. Again, any questions, please shout out. Yeah. John. Oh, your price action. Yeah, I mean, price action, you need, I guess practice is quite important, because for price action, you need to study the swings. And the swings are basically, all right, these circles that I draw, these are swings. Okay, so if you look at, this is the Nikkei, yeah? This is Nikkei. So if you look at the Nikkei, right, on a weekly chart, we are actually on a downtrend. Okay, because if you study price action, lower low here, this circles the swing, lower high, another lower low, and this is a potential lower high. Okay, in fact, the Nikkei look quite similar to the DAX at the moment. Okay, key level we're looking out for is 17,000, similar to the Dow, 17,000. So it's either we continue downwards here. Let me see if I can bring on my drawing tool. So either the 70,000 level is respected and we come back down to test the bottoms of about 16,000 or so. Okay, or if we break the 17,000, we might hit to the top of the channel here. Okay, somewhere here. All right, so this 17,000 is quite important to me because this level. So a lot of the indices are quite similar in the sense. The only thing is that I think the US indices are a bit more resilient because it's more consolidating, whereas the DAX and Nikkei right now is a bit of a downtrend. But right now we are testing a key resistance level. Okay, what's next? Let's move on to Hang Seng. Okay, so if we look at the Hang Seng weekly chart. Look at this beautiful trend line here. All right, there's quite a number of touches, and right now we are at that level. The level I'm talking about is around the anywhere between 20,000 to 20,300 or so. But if I zoom out the weekly chart, right, it's not surprising why that level is so important. Let me show you why. So you see the support here around 20,000. The support here is the circle I drew, and right now we are at that level. Okay. Now if you use price action theory, right, it is a very nice downtrend. Simply lower low. You see this low compared to this, all these lows. So that's a lower low. A lower high compared to this high. Another lower low here. And another lower high. So again, we are in the line of ascent. If it breaks the 20,300 clearly, chances are we might have reversed to the upside and we might make a push to 22,000. Okay, but if not, most probably we're coming back down to test the lows of 18,000, 19,000 again, and we might even break lower. All right, so we are at that point. Same for Hang Seng as well. So I'm not surprised if next week China does something funny again and the market starts dropping again. Okay, so I mean, there's always a fundamental reason for a move, but for me, sometimes technical analysis can give you a bit of a heads up or a leading heads up of what's going to happen. It's quite amazing sometimes when you see the news, right, and you see something come up, maybe an announcement for ECB saying that they want to do more QE and the euro drops. Sometimes you see where the euro dropped from. It's really not surprising that it is from a resistance level that it's going to drop from. So technical sometimes can give you a bit of a leading indicator rather as compared to news or fundamental news flows. So I'm not sure whether, for those of you who've been trading for a few years, not sure whether you share the same sentiment with me. Do you guys agree? Sometimes it's really surprising. I mean, euro dollar might be testing a resistance, holding the resistance line for a few days, and then suddenly Draghi comes out and says that, you know, they're going to pump more quantitative easing, and then going to do negative rates, and the market just drop. So it's quite interesting how it drops from a nice resistance level. Any of you agree? I mean, have you any of you experienced that before? Yeah, John. I'm not surprised. Really, the coincidence is really uncanny. It's very interesting. Of course, sometimes there are exceptions whereby, you know, a support resistance just gets breakthrough by the news, but a lot of times it's really quite interesting how the coincidence comes in. Okay, Murphy's law, I guess so. Maybe. All right, so I'm just saying that, I mean, we are the line in the sand for a lot of indices, so just keep your eyes peeled to it. Okay, something's going to happen, and a lot of indices are doing the same thing. The weekly chart says down, daily chart says up. All right, so you see a difference in two charts. You see a daily chart. This is higher high. For those, okay, let me just try to draw the circle for those of you not familiar with price action. Okay, so this was a previous high, right? So this was broken, higher high, and this one to this one's called higher low. It might be forming a higher low. So this is an uptrend on daily chart, but the weekly chart is still downtrending. So a lot of indices, the weekly and daily charts are telling two different things. Okay, but this week is going to be the week where something might happen, and then we can see which one is the true winner, whether the bulls, the bears are the true winners. Okay, moving on to China A50. Look at that, quite similar, is it? Daily chart, higher high, higher low, uptrend. Weekly chart, similar to the Hang Seng, testing a key resistance of this trend line. What's the level? I think the level here, level is not as nice as the Hang Seng, but we're looking about 9,005 or so. Okay, this is a weekly chart. So that's the indices for you. Okay, just be a bit patient and let the market do what it wants to do first before jumping in. All right, you guys got any other questions on indices? If not, I'm going to move on to FX next. Okay, if there's no questions on indices, I'm going to take a 10-second pause and then I'm going to start with the Euro. Srinivas, hi, thanks for coming by. When you say 1 second means you're going to ask me a question or you ask me to move on in 1 second? Kim Kiao, right? Do you trade on a daily chart? Yes. Okay. Good question. Srinivas is asking if there's a conflict between daily and weekly charts. What do you do, is it? Okay, Srinivas is asking if there's a conflict between the daily and weekly charts, isn't it true that a weekly chart should be more powerful? Yep, you have a point. The longer term charts are definitely is definitely more respected. Okay, but sometimes if it wants to turn, right, if the weekly chart wants to turn around, let's say the China 50 chart, if the chart wants to turn around to the upside, the lower time frame will show it first. Okay, so that's where the lower time frame can give a bit of heads up. So I always like to look at both charts. And the key question to ask yourself is this: which chart are you trading off from? So let me move to Hang Seng because the Hang Seng is very nice clear levels. Okay, so if you look at the Hang Seng here, on the right is a weekly chart which shows a clear downtrend. On the left is the daily chart which shows a clear uptrend. Now, if you are trading off the daily chart and you are looking to buy because you say uptrend, you want to buy, right? Now, where do you think is a key support to buy? Are we there yet? Okay, the answer is maybe not, because the support might be somewhere here. Okay, which is around 19,006. And if you draw a trend line, you can say that, okay, I'm waiting for the market to fall to this level here, around 19,006, 19,007 before I push up. So if you are bullish, okay, you definitely wouldn't buy close the resistance at around 20,003, isn't it? Because looking at the weekly chart, the weekly traders will be trying to short. You see a difference? So which time frame you're trading off is very important. So the first question you ask yourself, okay, some of you might want to write this down, yeah, but this is a thought process which I go through every time when I analyze and scan the market. The first question is, what's the trend? Is it uptrend, downtrend, or sideways? Okay, remember the slide I showed you in the beginning of the webinar? So what's the trend? Ask yourself that question, what's the trend? Second question you ask yourself, which time frame is your reference point? Are you trading off the weekly chart or are you trading off the daily chart? Okay, the time frame is very, very important because it determines your expectations. Are you planning to hold this trade for 1 day, 1 hour, 1 week, 1 month? That's the first thing. And number two, it determines how you plan your trade with regards to risk to reward. So which time frame is your reference point? That's very important. Okay. Number three, all right, where's the support and resistance? So for example, if I'm trading off the daily chart on the left and I say that, okay, daily chart uptrend, I want to buy at 9,007 because there's a trend line support, there's previous horizontal resistance and support, so I want to buy at 9,007. However, I need to be mindful that when I go to a weekly chart, I know that there's resistance at around the 20,003 level as well. So if I'm planning to trade off the daily chart and I'm buying from 19,007, maybe my first target is close to the previous high of 20,300 because that is the weekly resistance. So that's where I bring in the support and resistance in. Okay, that's number three. And lastly, number four, plan your entry exit, which is your risk reward. Okay, so every time I look at the charts, I use these 4 steps to have an understanding of what I'm trying to do. Most new traders or most traders get confused whereby they mix up the charts. Okay, whereby they think that, oh, daily is in the uptrend, they just buy it and they fail to look at the weekly chart or high term time frame. So it's always, when you're studying support and resistance, always good to go back and forth. Okay, Srinivas is asking, isn't it true that you use the high time frame for the trend but use the lower time frame for entry and risk reward? Exactly. Okay, so you use lower time frame for entry to risk reward. Okay, what I'm covering in the webinar is mostly analysis, mostly on what the trend is on different time frame. But once you have the understanding of what the market is trying to do, that's where you drill down to lower time frame to plan your entry. Okay, so if you look at the daily chart, so for example, if you say that, okay, uptrend bullish, I want to buy, I'm waiting for it to come down to this 19,006, 19,007 area. Once it hits your sweet spot, that's where you can go down to the 15 minutes to try to plan a trade. Okay, to try to plan the trade. 15 minutes or 1 hour. Okay, but the whole point is get an overview first. All right? But which time frame is your reference point? That's very important. Yeah. Mr. Tan, did I answer your question? Thanks for asking that, Srinivas. Okay, so I do look at 15-minute chart as well, Mr. Tan. So yeah, I do look at the 15-minute chart as well, definitely. But I'm just talking about planning point of view. So when the two charts, of course, the best charts to trade are when your weekly and daily chart is in alignment. It's in alignment. That's the best. Now, when look at this Hang Seng, for example. If you look at, you see this big drop here. This was January 2016, right? All right, you see this big drop of Hang Seng. So weekly was a very bearish chart. And if you compare January on the daily chart, you see this kilo was broken. It was a very bearish chart as well. So the best type of trades are whereby your weekly and daily time frames are telling the same story. Okay, right now they're telling different stories, so it means that be careful, plan your trades, be patient, wait for the action. Okay, there are some charts that have been trending very nicely on the weekly and daily charts, especially in the FX markets, the yen pairs, the cross currencies pairs like pound CAD, or pound Aussie, euro Aussie. Those are beautiful trending charts. All right, so these are the charts that you want to jump on. Okay, this week is a bit tricky because a lot of these charts, the trend has ran its course and it's trying to decide whether it wants to pull back or reverse or things like that. Okay, John, new traders will trade following the plan, but when against yeah. Yeah, I agree. I think John has a very good point. New traders, you know, they follow the plan when they enter, but when they are losing money, they hold it using the weekly charts as a reference point instead of the original maybe 1 hour chart or 4 hour chart. Very typical. Okay, so don't be in that category. Yeah, don't say that, you know, a long-term trade is because it's a losing trade. Okay, don't be afraid to cut loss. In fact, there's one thing about trading. The key point, one of the top 3 key things is cutting loss. If you ask me. Okay, because cutting loss can allow you to free up your mind to plan, you know, to plan another trade, to analyze the market in a more objective manner. Because if you have a running loss, trust me, especially if it's a big amount, you'd be so focused on that particular loss, hoping and thinking when we come back for you, and your mind is very is very too focused on that. You can't plan on other things. Okay, so cutting loss is very, very important, all right, so that you can live to fight another day rather than keep holding on to it and you keep thinking about it. Okay, you need to trade with a free mind. You can't trade with baggage inside. Easier said than done, of course, but that's why trading is not easy, isn't it? Psychology is the name of the game. So, okay, so that's Indices. So any other questions? Thanks for asking those questions so that we can discuss a bit more. I'm gonna take Nancy, hi. Straits Times Index. Are there Straits Times here, Nancy? How about Singapore Blue Chip? Okay, let's go to Singapore Blue Chip right now. Let me just zoom out a bit. Let me just have a quick look at the monthly chart, yeah. Tricky. Okay, let's go to Singapore Blue Chip now. Let's look at the weekly chart. So, excuse me, sorry. All right, so Singapore Blue Chip chart, if you look at the price action, right? Okay, the key swings are here. So you can connect using this line. No, sorry. It's not a nice line. Let me just see whether... Okay, this is a key level as well. Here, this 320. Okay, we have made a complete reversal from the bottom here. If I zoom out a bit on the weekly chart, right? If you look at this 300 level, okay, this 300 level was breached in February, which led me to believe that we are in very bearish territory because we broke a key support level that has not been broken since 2010. However, the recent rally, okay, is a bit tricky, because ideally, normally when a downtrend starts, right, if it pulls back to a key previous support term resistance at 300, it should come down again. But for this case, just make a whole U-turn. So for those of you who tried to trade a breakout and lost some money, I would say that it's a good trade plan. Okay, I would have taken it. I don't trade Singapore Blue Chip, but this is a classic downtrend pull back to the previous support term resistance 300 and hopefully it come down again. But I didn't do that. So it's still a decent trade plan, but this spike, it is what it is. Okay, the key thing right now is to look at is the 320 level, 320 level. Okay, the 320 level is very, very important right now because it's going to determine whether we're going to come back down. Okay, I suspect that we might come back down to test the 300 level again, and then we'll see whether the market can push further. But it's quite similar to the other indices that is testing a key level right now. But if you look at all the indices, especially the weekly chart, right, especially for those who study divergence, very interesting that most of it has bullish divergence on the weekly chart, and that's why we see for the past few weeks the rally came in. Look at this MACD, and this MACD bullish divergence was formed in 1st Feb 2016. So it really gives you a heads up of what might happen. All right, so for those of you who don't study divergence, add that to your trading tools. Very, very useful. Okay, this is a bullish divergence. So 320 is a key level right now on the weekly chart. Okay, but similar to the other indices whereby the weekly is down, daily is up. All right, so be mindful of what trade you're planning, and I wouldn't keep any trades long term for now because until a clear direction is being shown. Okay, is that okay, Nancy? Okay, so I'm going to move on to FX. Let me take a 10-second pause first. Okay, let's talk about FX now. Now, I brought my MT4 platform up. I think I introduced this to you in the last webinar, and basically the purpose of this is to have a market scan. For those of you who weren't around, right, I'm using MT4 right now to do market scans so that because I'm a very lazy person, I do like to click through different charts one at a time to plan my trade. So I just want to have an overview of what's happening, and then from there I cherry pick the best trends to trade. So if you have MT4, right, you can just sign up for a live MT4 account on IG. I mean, if you prefer trading on the IG platform, go ahead, but you can just use the MT4 platform for analysis purposes. So what I've done is that I've added a few profiles, like you see crosses, indices, yen, USD. So for example, if I have a yen profile, right, what it does is I have all my daily charts of most of the yen pairs. Okay, so from a quick scan, I know which is the strongest and weakest already. Okay, so if you look at all the yen pairs, one glance and you know that Aussie yen is strong, Kiwi yen is strong, Sing yen is strong, CAD yen is strong. Okay, the weak ones will be Swiss yen, pound yen, euro yen, things like that. So it gives you an overview, and it basically helps you to trade the easiest, the most, the trend, the highest momentum. Yep, you can use Pro View Time as well. Depends on what's your preference. But I like MT4 because it's very quick in terms of loading all the charts. Okay, Pro View Time uses Java, so loading the charts a bit slower. So I just like to have a quick scan, and then from there, once I know which chart I want to trade, I use Pro View Time to zoom in and plan my trades. Okay, so what I wanted to show you for FX is the cross currencies. I mean, look at the cross currencies chart. I got Euro, Aussie, Pound, Aussie, Aussie CAD, Euro CAD, Pound CAD, Euro Kiwi, Pound Kiwi, and Aussie Kiwi. Okay. Now let me just shift this a bit. Sorry, put the CADs together. For those of you who have not traded cross currencies, give it a go. Yeah. I mean, it moves really fast. That's what I like because if you're correct, all right, 100 pips a day easily, especially if you're following the trend. Okay, but if you're wrong, also it can be quite detrimental. So just be a bit careful. But I like cross currencies because it moves really fast. Okay, so a quick glance at all the different cross currency pairs I have on my MT4. Which one do you think is the most bearish? What do you guys think? Which one do you think is the most bearish? Oh, this 8 pairs. Yep, pound CAD, exactly. Yep, the most bearish, I would say pound CAD, Euro Aussie, pound Aussie, Euro CAD as well. All right, so I'm keeping a keen eye on pound CAD, Euro CAD, Euro Aussie, and pound Aussie to see whether I can squeeze any trades in. Okay. For those of you, okay, let me just see. Okay, if you look at pound Aussie, for example, right, look at that. Look at how nicely bearish trending this market is. Okay. Same thing for Euro Aussie. Look at that. Beautiful, isn't it? Right? Now, in between, it's been dropping for a few weeks right now. It wants to make some kind of retracement. So let me just go to one of it for example, yeah? So let's go to pound Aussie. Hold on. Okay, so if you look at pound Aussie, you can see how bearish the weekly chart is. Look at that, 1, 2, 3, 4 consecutive week of bearish candles. Okay, the only thing that I'm not really liking for shorting opportunities right now is that we are at support level at the 1900 level. Okay, so I'm going to be very patient with this pair, and I want it to retrace slightly higher, maybe at the 19250 level first. In fact, we did go there. Let me see whether it went there today or not. I think some of you saw the trade idea setup that my marketing team sent out this afternoon. Is it? I'm sorry for the typo. Yeah, I think the email that went out put Euro Aussie is actually Pound Aussie. Okay. So this was the level I was looking at, around the 19250. 192. Oh, it went to 19240. 10 pips short. Okay. But the trade plan was a short-term trade plan for it to react off this level here. And the target was simply back to the previous support around here. About 100 pip trade. That was a trade plan. All right. I think the email was sent out this afternoon or this morning. Okay. But where we are right now, right, I'm really not keen to short anymore. All right. I mean, it is very bearish, that's for sure. But there's really no point trying to chase the downtrend when we are close to the previous lows at around 190 or so. Okay, bear in mind that the weekly chart, this is a strong level of support. So I'm going to be very patient. All right, I want to see what happens if it bounces back to 19250. If not on the weekly chart, let me just zoom in a bit for you. Just delete this circle here. Okay, if not on the weekly chart, okay, this is a key level that I want to look out for. If that 19250 is broken above, right, I'm looking for a bigger retracement, maybe back to this 19500 level. So, okay, it's going to take some time. It might not happen this week, might not happen next week, might take even 2 weeks. But these are the two levels I'm looking out for. 19250 for shorter term retracement. A bigger retracement is 195. Okay, but this is based on weekly chart, so you got to be patient. Okay, this is a swing trade type of setup. All right, so this is the pound Aussie for you. All right, but this is really, really nice trending to the downside. Let me see whether I can show you. Okay, now for those of you, right, now for those of you who always tend to miss out trends, the question you ask yourself is this. Now, this was a beautiful pullback. Okay, this level here, again, on hindsight, anybody can say that, all right? You can sit down where I'm sitting and say that this was a nice pullback and came down. But as a trader, you need to know, number one, what is the trend? So where did the change of trend came along? Okay, I'm talking at hindsight, yeah, I'm talking at hindsight, but I just want you to learn how to spot trends and trend change. So you can see that it was consolidating in this little wedge formation here, isn't it? Let me just delete some lines to make it clearer. Okay, so it was consolidating in some form of wedge formation. All right, and the key level support is around the 198 level, and it broke through. It broke through. So this was a very clear lower low. Okay, you see this low compared to this low. So this is a very, very clear lower low. Now it made a pullback in early March here. And I tell you, this was a really nice pullback for you to have taken a short. So bear this in mind, it's near the 196 level. Okay, and if you're looking at daily chart to plan, you would have told yourself that this is a very bearish trend today, and you want to short, and you're looking for resistance to short. So even if you miss this whole move, right? All right, this was a nice level to get in on near the 196. So let's go to a 1 hour chart and see where was the 196. Okay, it was here. It was here. So the question is, how do you use a lower time frame to enter on a longer, higher time frame trend? Okay, so we know that when you broke the key support here, so this whole level was determined as a downtrend based on daily chart already. Okay, what happens that it started to consolidate higher, and that's where the higher term time frame gives you a clear picture, because if you look at the 1 hour time frame, it's actually moving on uptrend. But if you are a swing trader like myself, then you say, okay, daily chart is still bearish, and I only want to short. So you're just waiting for the 1 hour to confirm your analysis. So if you look at the 1 hour chart, alright, it formed some form of trend line support. Okay, but don't forget, in your mind is always bearish, bearish, bearish because the daily chart is bearish. Okay, and you're just waiting for the 1 hour to confirm before you jump in the trade. Alright, so the 1 hour is making its way up slowly, up, up, up. Now the first sign that the 1 hour wants to drop and continue the downtrend from the daily chart is when it broke this trend line here. Okay, so if some of you can short based on the break of this support, stop loss maybe above this swing high here. Let me just draw a line here. I'm going to a bit more details here so that you guys can learn not just how to analyze but how to place a trade and how to exit and manage your trade. Okay, so a break of this trend line might be a good place to enter. Your stop loss can only be above, I mean it can just be above this previous swing here. Okay, or if you want to be a bit more conservative or also aggressive, you can just put it above this swing here. Okay, you see this line, this swing? Okay, so maybe you entered around here, around 194 or so when you break. Stop loss above here. This one gave you a scare, but it still did not hit your stop loss. It shouldn't hit your stop loss because every time when you enter a trade, okay, the stop loss should be on the previous low or previous high of the previous swing, the high and low of the previous swing. So this was level. So even though it came up here, it's a bit nervy, I agree, but it shouldn't hit your stop loss. And then from there, start going down, 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 down. Okay, so this was a beautiful setup on a 1 hour chart. Bearing in mind that at the back of your mind, you're always clear that the trend is down based on the daily chart. Okay, you get what I mean? If you think that there's too much noise the 1 hour, you can even enter your trade based on the 4 hour. But it's the same analysis. But it gives you less noise. So you see the 4 hour was trending upwards here. Okay, again the trend line was here. You see how nicely it broke? It came back, test again, and then down, 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 down. Alright, you see what I mean? So I'm just giving you a bit more details on how to enter the trade based on high term time frame analysis. Okay, so that's pound Aussie for you. Same thing for your pound cat, and let me just have a look at Euro cat for you. Let me see whether Euro cat is just nice. Okay, Euro cat is in a downtrend as well, but it's also testing a trendline support. Let me just adjust this bit. Okay, support levels at around the 14550 level. Alright, so downtrend, but it's at support. Daily is consolidating a bit already. Okay, so Euro cat might not be a best choice, but now let me have a look at pound cat. You guys got any other currency pairs you want me to cover? But these are the nicer trending ones for the moment, yeah? So if we look at pound cat, let me zoom out a bit. Okay, now pound cat, this is the most obvious support level. Okay, around the 185, which we have not hit yet. Alright, so hopefully there's some legs to go. So my plan for you, pound cat, is also to short. It's bearish. I'm key to see the levels where we are right now. Okay, first level I'm looking at is around the 192. Okay, let me zoom in a bit. Alright, you see this line here? This is a 192 area. Okay, the next level that I'm keen to look up for resistance is around the previous touch here, around the 19050 level. Okay, so it's downtrend, definitely downtrend on the weekly chart. Let's look at the daily chart. Okay, so if you look at the daily chart of the pound cat, okay, so this level I'm looking at, the first level is somewhere here, 19050, which we have rejected one, so let's see whether we can reject it again. Okay, if not, I'm looking for a higher retracement level. So let's see where. In fact, yesterday I took a short based on this candle here. Okay, I took a short, but I got stopped up break even. Okay, so let's see what happens. This 19, I would say anywhere between 1900 to 19050. I'm looking for a change of trend on lower term time frames, and I'm hoping to join the trend downwards. My first target will be the previous low at around the 187 or so. Okay, so that's the trade plan for pound CAD, but these are all, the momentum is still to the downside, so that's why I'm planning bearish trades. All right. Now let's go to the majors. Okay, somebody just trade the majors. Let's go to the majors. Now euro dollar has been quite mixed for quite some time, so I'm not really touching it. But if you look at the weekly chart of euro dollar, right, one week it wants to go up, one week it wants to go down, so it's a bit of a tricky one. But the weekly chart is supported by this trend line here. Okay, I'm not a big fan of trading consolidation, especially when it's not clear. Okay, but I would say the key level to look out for euro dollar is 108. If it breaks 108, very likely we'll go back to the 105, 106. But right now it's just consolidating. Alright, especially for a swing trader, nothing much to do. Alright, look at the daily chart. Okay, let me just zoom out a bit. On the daily chart, we are near a key level of resistance around the 1100 level. Okay, and there's not much trend to me. Okay, I don't really talk much euro dollar because it's very, very mixed. Okay, I don't like to trade charts that are mixed. It's just not nice. The trends are not nice at all. Okay, let's take a look at dollar yen as well. Again, you guys got any currency pairs that you want to look out for? Just shout out, yeah. Okay, so if you look at the dollar yen weekly chart, okay, we are in a downtrend. If you look at how it created a lower low here, okay, and lower high compared to this high. So we are in a downtrend. All right, key thing to take note is, let me zoom out a bit. Okay, can't see much. Okay, key thing to take note is whether we are going to continue the downtrend to the downside. It's been quite sideways for the past few weeks, for the past month actually. But it seems to me that the 114 level is quite key level. Okay, this 114 level. Let's take a look at the daily chart. Okay, so daily chart can see a bit more consolidation. So better to be patient on the dollar yen. If it breaks above 114, then you can target the 117 level. But if it breaks downwards, I'm not surprised if the downtrend on the weekly chart continues. And we might come back to 110. And then there'll definitely be talks about BOJ intervention again. Okay, but weekly is in a downtrend for the dollar yen. Okay. Aussie dollar, yes. Aussie dollar has been quite a star performer for the past few weeks, isn't it? So if you look at Aussie dollar, this is a weekly chart. You notice how the trend changed. It was a very nice downtrend. Okay, so you can see this whole area here was a nice downtrend. And then we enter a phase of consolidations here. So from downtrend to consolidation. Now right now, it seems that it has broke the key resistance at around 74. Alright, seems like a very nice breakout. And I'm is looking to test the next level of resistance at around 76. Okay, so the weekly chart seems to have broken out to the upside. Momentum on the MACD, no divergence. This is good this is good to me. If you go to the daily chart, you can see how bullish this is. Okay, it's just that if I'm bullish on Aussie dollar, but I would not be that keen to buy anywhere near the previous high. I was hoping that it can retrace at least back to the 73.50 area, somewhere here. Let me zoom out a bit. Okay, let me just delete some of the lines here. Okay, but you see all these touches here, 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 here. So I'm hoping that it can retrace maybe back to the 73.50 area, and then make another push higher, and then target maybe the 76 resistance area. Okay, but it definitely seems bullish on the Aussie dollar. Okay, look at the daily chart. It's making a series of higher highs and higher lows. Definitely bullish, but I'm not that keen to buy right now. I'd rather let it retrace a bit more. Okay, but Aussie dollar is always very correlated to China. It's quite interesting that even though the export numbers from China came out really, really bad today, the Aussie dollar still proved to be quite resilient. Okay, but key thing Thursday, I think it's Thursday, China's CPI is coming out. So if you're trading Aussie dollar, please be very mindful of China news. All right, Mr. Ng? Okay, any other FX pairs that we're looking at? If not, move on to a bit more commodities. Okay, let's go on to, let me take another 10-second pause and move on to commodities right now. Oh, sorry, John. Aussie up may be due to commodity rush recently. Yep. Which is why I'm going to talk about oil and stuff. Okay, so let me move on to commodities. Okay, so let's start with Brent. Let me go to the main contract. Now, I'm quite surprised by the oil push up, yeah. I mean, fundamentally, nothing much has changed in terms of supply and demand. All right, I'm just talking fundamentals here, but what is supporting and causing the oil price to rally is because a lot of talks by OPEC members and oil producers that uh, they might set a ceiling in terms of production. And in some numbers from the US shows that oil production has came down as well. But to me, fundamentally, it's I think the demand from China is still going to be slow. Supply side, we are already producing at all-time high, so any ceiling might not be that effective. Iran sanction is just lifted, so I'm sure they want to grab some more market share. So if anything, I think this oil rally is just a hiatus to the drop. And I think that we might continue a downtrend maybe this month or so. Okay, but that's my fundamental view. Okay, did I trade it to the downside? The answer is no. Okay, the reason why I'm sharing you my view is because I want to give you understanding the difference between your fundamental view and what's happening on the charts. All right, you got to understand that you are a trader. Okay, and as a trader, the charts are very important. Being a price action trader, I follow the price like a dog, meaning that like a dog is in DOG, meaning that on the charts, if the price is moving up, I follow it to uptrend. If the price moving down, I follow it to downside. It does not matter what my bias fundamentally is. Okay, because fundamental bias can take months or even years to materialize. And what makes you so sure that you're right? I mean, who can guess what yellow might do in the next year? Or who can guess what the ECB might do? Or whether UK will exit from the EU? I mean, at the end of the day, it's just an educated guess. Okay, but as traders, we don't use guesses to place trade. We use technicals. We use charts. All right, so there's a clear distinction there. So I have a bias, but it does not mean that I'll trade my bias. Okay, of course, the best trades are whereby your bias and your technicals are telling the same story. Just like what happened during the yen pairs for the past 3 years or so, right? Remember when the BOJ just announced their the quantitative easing and interest rate cuts and things like that. That was 3-4 years ago. A lot of my clients, a lot of traders make money from just shorting the yen or buying the yen pairs. It was an easy trade because fundamentally they are doing the quantitative easing. Technically, a lot of the yen pairs are shooting up like dollar yen. So really, really good trade. Okay, really, really good trade. But for oil, for example, even though my buy is still bearish, the daily chart has changed itself to the upside. Okay, when it broke, I'm quite surprised it broke 36 actually. Okay, so it was consolidating for a bit. It was, let me just zoom out a bit. It's a daily chart. Okay, so I was planning to short back to the 3006. Okay, but this trend line, look at this daily chart. This trend line does not want to break. Okay, so I was lining up shorts at $36, but this trend line support was still holding. Okay, and I also wanted to short when we are close to the $38 level. There's no level of resistance. Okay, but the short-term chart did not come down, so it kept me out of trouble. So technicals are very important. Okay, so if not, my fundamental will make me lose money because I'm still I'm fundamentally bearish on oil, isn't it? So right now, the key thing to look out for is this. Daily is on the uptrend already. It has reversed to upside on daily. Okay, the weekly chart. Okay, the weekly chart, it seems that it's broken a new high as well. Okay, it broken the $38 level, a new high as well. So what I'm looking out for is this next level at around, I'll say around 43. Okay, around 43. This is where you see the previous touches here. So the next level at around 42, 43 or so, I'm very keen to see whether it can break above it. All right, so look, go back to the daily chart. All right, you can see that it's been very, very bullish, and the next level of resistance is only somewhere here, 43 or so. So I'm not surprised if we make a touch out there, and then we'll see what happens. Okay, but it seems to be quite bullish right now, and if you're a price action trader, you should stick to the price and start buying based on the trend perspective. Okay, so trading and investing is two different things. Okay, I'm not saying that you should just buy now and keep for 5 years. I still think there'll be a push down lower, but I'm just saying that on the daily chart, swing trade wise, it looks bullish. So we might make a push back down to $38 support. Oops, sorry. Okay, might make a push back down, and then maybe go to 43, and then from there see what happens. Maybe it'll fall from there. I don't know. Okay, but this is a possible trade plan. Alright, but it seems bullish. Srinivas, you say you review zinc. Wow, I'm not sure they have a zinc chart here. Yeah, why not? Why not? If I have a chart, I'll be more than happy to review it. Okay, but I hope you guys are able understand what I'm trying to say when it comes to fundamental view and technical view. Okay, because I speak to so many traders, and sometimes they are so dead sure about their view that they're just trading towards their bias. Okay, but like I say, fundamentally is very different from trading. It's more like investing. It's the same thing like how a lot of traders think that the rally in the equities market has no legs to run for the past 2 to 3 years. Alright, I know some traders have been shorting the S&P since 2013, 2014, and still trying to short it. So when January came in, right, remember January there was a big drop most of the indices, partly because of the China circuit breakers. A lot of these traders were very happy, but look what happened now. Everything just U-turned back up. Okay, so very dangerous to just trade on fundamentals unless you're an investor and you are holding cash equities or deep pockets. That's a different story altogether. Okay, but as a trader, charts, please make sure you're good at the charts. All right, so that's all for you. Short term still looks quite bullish. Okay, the next level of resistance look out for is the $43 level. All right, so this yeah, thanks. Yeah, you're correct, John. FA gives the info, TA gives the timing. Yeah, exactly. Okay, let's try zinc. I'm not looked at a zinc chart in my whole life. Let's see if I can find it. I don't know we have zinc. Thanks for telling me, Srinivas. Okay, zinc. Why are you getting zinc? Interesting. Let me have a look. Is there something that I'm missing out on? Not very nice charts. Shucks. Zinc. I don't have very nice charts to analyze now. Yeah, I'm sorry, cinemas. I mean, the chart, I don't really have enough history on this probably time to analyze zinc, but it is definitely an uptrend. Okay, higher, low. I think the next support level and look out for is 1780, and maybe you can target the previous resistance near 1850 to take profit. There's a bit of a trend line here. Okay, but this trend line should guide you, but looks like huge. Yeah, yep. Based on the limited charts I have, right, this 1850, it's very important. You're right. Okay, so short-term trade, good level to buy near the 1790. First target, definitely back to previous high. But be very mindful, you're right, 1850 is a key resistance. If it breaks this trend line, most probably it's coming down, maybe back to the 170 support. Okay, I'm sorry, there's not much chart I can work with here, but this is basic analysis I can do. Okay, but you got the gist of price action and support resistance. So let's look at gold. Gold, very bullish as well. Interesting, isn't it? In terms of fundamental, gold is quite tricky because last year we are quite bearish because USD has been strong and USD is negatively correlated with gold. And whenever there's a panic, gold will shoot up. But this year, gold shoot up because there was a panic in January-February period. But in March, when the markets were relatively calmer, when the equities market was moving higher, gold still continued to push higher. Very interesting. Okay, but it is what it is. Fundamentally, technical wise, it is definitely bullish. So I believe my last webinar, right, we were at this green candle here. I'll say it's bullish. And I was saying I'm keen to look for it to retrace either back to the 1200 or 1180 level. Okay, it did exactly just that. Okay, although you need to be very fast to catch it. Look at these two candles here. It touched and shot up, touched, shot up, and then push higher. Okay, so this is still an uptrend. All right, it did come down to as expected near the support at 1200 and then it shot up. We are still in an uptrend, so let's see what's going to happen next. Okay, resistance level now 1275. I wouldn't be buying anymore, even though it's an uptrend. All right, will I be shorting? No, because I'm not a counter trend trader. But 1275, 1280 seems to be quite a key resistance level right now. Okay, so I expect some form of reaction here. So go bullish, but I'll be on the sidelines. Okay, maybe I'll let it come down and make one more push up. All right, look at the support here to buy up again. And oops, sorry. Okay, and target maybe this is a short-term trade. Target the previous high. Okay, but this 1280 is a key resistance level. Yeah, so just be a bit mindful. All right, I anticipate some kind of reaction and maybe a bigger retracement back to maybe the 1240, 1250 level. Okay, and if you look at divergence, look at the MACD here. MACD says lower high, price action says higher high. Any of you can tell me what divergence is this? Exactly, thanks. Bearish divergence. Okay, so bearish divergence at key resistance level. I'm not surprised if it start coming back down for the week, maybe back to 124 or 125 level. Yep, you're right, Srinivas. It is still forming, but the key thing, look at that. He has made a significant higher high, which means that if this divergence is going to be wrong, right? If this divergence is going to make a new high and become a convergence rather than divergence, price need to push even higher for this to make a higher high in the MACD. So if you're right, it's still forming, and I always say that it's good to wait for the swings first. But for this case, 1280 seems to be very strong resistance. Unless you tell me that it can make a push higher to 1330 and MACD make another push higher, then it's converging, then maybe. But this is just a heads up. So resistance plus bearish divergence, chances are it might start falling from here. So for those of you who are counter trend traders, you can look for a lower time frame change of trend, like on a 1 hour and 4 hour, and perhaps take it down back to the 1250 period. You get me, Srinivas? So this case is quite clear cut. So sometimes you don't even need to wait for it to form to tell that it's a very nice bearish divergence. It's quite clear cut. Okay. And look at how extended gold is. I mean, how many weeks of just pushing higher. So I'm not surprised if we make a pull back down back to 1240 level. All right, let's go for you. All right, any other last questions before I wrap up the session? Again, this session is recorded and I'll get them to upload it within the next 2 days so that you guys can have a look and review it. All right, any other last things you want me to cover before I wrap up? FTSE, let me see what I have FTSE here. I've not seen FTSE for long as well. Oh yeah. Okay, sorry I missed your question, Mr. Tan. Let me talk about FTSE for just a quick one. Oh my goodness, don't hang on me right now. Hold on, yeah. There we go. FTSE. So this is, I never like to trade FTSE. I don't know. I mean, I look at the candles and the price action. Right? It's always very volatile. My favorite European indices to trade is the DAX. The DAX is always the nicer one. I mean, if you look at the candles of FTSE, it's just really hard to trade. All right. But if you look at the weekly chart, oh, ugly. Let me see. Yeah, still bearish. Hold on, yeah. Let me have a look. Resistance. Okay, so in terms of the FTSE, right? Okay, key level, same thing as most of the indices. Key resistance around the 6,200 level. We are somewhere there at the moment. So it's quite bullish on the daily chart, I'm sure, but the 6,002 is key to me, and we are testing this key resistance level. All right, so if it breaks above it, yep, might want to jump in alongside, but I think there'll be some reaction and maybe a push down back to 6,000. Okay, quite similar analysis to the other indices. All right, seniors. Mr. Tan, okay, how to use the scan using MT4? So MT4 is basically something I set up myself, and you can do the same. So what you do is that you go to, for example, Euro Aussie on the market watch. You right click, go to chart window. Okay, so you bring out chart. You can right click again, go to properties, and that's where you can change your backdrop color, your chart color, your candlestick colors, and things like that. And basically what I do is that you just position it here, and then you can go to another chart here, maybe Euro Pound, again go to chart window. And once you've done everything right, all you have to do is just go to window, tile windows, and everything will be tiled accordingly like that. Okay, so the profiles that I have is yen, crosses, indices, USD, and Swiss. So it depends on what you analyze as well. But for me, I just want to see what's the strongest and weakest. That's the key thing. So if I'm bearish on pound, I want to see which the nicest pound pair to short and things like that. Or if yen is bullish, I want to see which the nicest yen pair to buy or to sell. Sorry. Okay. All right. Now, thank you so much for attending this session of Market Talk. There's another session next week. I'm compensating because I went for reservist in February. So there's another session next Tuesday, but if not, this session is actually a fortnightly session. Okay, but I'm doing one next week. Next week I think is March the 15th. I think 1/5. Yep, 15. All right. So again, please sign up for next week if you're keen to analyze the market a bit more. Let's review what we've spoken about today. If not, happy trading, and don't forget to plan to trade the plan. All right. Have a good night. Take care.